The current time is 7:35 p.m. on Saturday, December 20th, 2025. The market is currently closed for the weekend. BigBear.ai Holdings, trading under the ticker symbol BBAI on the New York Stock Exchange, finished its most recent trading session on Friday, December 19th, 2025, with a closing price of $6.26. This represents a substantial intraday gain of 63 cents, or 11.19%, after the stock saw volatile swings between a daily low of $5.70 and a daily peak of $6.34. While the general market narrative suggests that this double-digit rally is just another wave of speculative fervor in the software sector, the reality is far more calculated. Most retail traders looking at their screens on Friday afternoon saw a green candle and assumed it was just a sympathy move following broader tech momentum. However, the real catalyst was a strategic partnership with C-Speed, a radar solutions provider. This isn't just a press release deal, it's an integration of BigBear's ConductorOS with LightWave radar systems. This specific development moves the company away from being a mere dashboard provider and puts their tech directly into edge-deployed hardware for air defense and drone detection. When you see a stock jump 11% on 218 million shares of volume, more than double its daily average, you aren't looking at a fluke. You're looking at a massive shift in institutional positioning that most people missed while focusing on the bigger names like Tesla stock or Nvidia stock. The expectation for BigBear.ai has long been that it's a high-beta, meme-adjacent AI play that lives and dies by the hype cycle. People often compare it to the volatility seen in the Robinhood app or the rapid fluctuations in crypto. The common ground among skeptics is that the company lacks the scale to compete with the giants. But if you look closer at the reality of their recent contracts, specifically in the defense and homeland security space, you see a company carving out a niche where the big players are too bloated to move fast. They're moving into high-consequence environments where the Department of Defense is desperate for agility. While many retail investors are still trying to navigate self-investing through a basic online investment account, the smart institutional money is watching these smaller, mission-critical partnerships as a proxy for the next wave of government spending. Looking at the immediate price action, Friday's move pushed the stock above its 200-day moving average of $6.18, which is a technical threshold that often triggers algorithmic buying. We saw a similar surge earlier in the year when the company announced its expansion into the UAE, yet this time the volume profile is much healthier. The trading volume we saw on Friday wasn't just retail churn. We are seeing fingerprints of institutional accumulation. When you see 218 million shares change hands in a single session for a company with a market cap around $2.7 billion, that is a complete rotation of the float. It suggests that a significant number of shares are moving from weak hands to strong ones. If you're using a professional platform like Interactive Brokers or even the Fidelity mobile app to track these flows, you'll notice the bid-ask spreads remained remarkably tight despite the high volatility, which indicates deep liquidity and serious participation. Now, let's address the elephant in the room. The expectation for many bears is that BigBear.ai is a dilution machine. This belief stems from the fact that the company has had to raise capital frequently to stay afloat. In fact, just this Friday, they had to adjourn a special meeting of stockholders because they didn't have enough votes to approve an amendment that would increase the number of authorized shares. The reality, though, is that the market seems to be looking past this. Usually, the threat of more shares being printed would send a stock into a tailspin. Instead, BBAI rose 11%, which suggests that investors are more concerned with the growth potential of the C-Speed partnership and the recent acquisition of Ask Sage than they are with a bit of potential dilution. It's a classic case where the growth story is starting to outweigh the balance sheet concerns. Comment below how many shares of BigBear.ai you currently hold, or if you're waiting for a dip back to the $5 level before jumping in. The recent performance of BBAI stands in sharp contrast to the broader software sector, which has been somewhat stagnant. If you look at the 52-week range of $2.36 to $10.36, the stock is currently sitting in a healthy middle ground. It's not overextended like some of the high flyers you might see in a Schwab Intelligent Portfolios or a specialized tech ETF, but it's no longer in the basement. This mid-range positioning is where the most interesting risk-to-reward setups often happen. If the company can successfully reconvene that shareholder meeting on December 30th and get their capital strategy in order, the path towards the $7 target that some analysts have set looks increasingly clear. To understand the core of this company, you have to look at what they actually do. They aren't building a chatbot to write your emails. BigBear.ai provides decision intelligence. Their business model is built on three pillars: global supply chain modeling, national security, and digital identity. They take massive, messy data sets from disparate sources and turn them into actionable insights for people making life or death decisions. Think of it as the nervous system for a military operation or a complex border security grid. They use predictive analytics to forecast events before they happen. This is why their partnership with C-Speed is so vital. It's taking that intelligence and putting it into a radar system that can tell the difference between a bird and a hostile drone in milliseconds. Historical performance has been a rocky road. The stock went public via a SPAC, and like many companies that took that route, it faced a massive sell-off as the initial excitement wore off. Revenue for the third quarter of 2025 was around $33 million, which was actually a decline from the previous year. On the surface, that looks terrible, but the reality is that the quality of that revenue is improving. They are moving away from lower-margin services and focusing on high-margin software subscriptions. They actually posted a net income of $2.5 million in Q3, a massive swing from the $15 million loss they had the year before. This was largely due to some non-cash accounting adjustments, but it shows a company that is finally getting its house in order. They have a backlog of $376 million, which provides a significant cushion for the coming year. For someone looking at online investing, these are the details that matter. It's easy to get distracted by the flashy headlines on investing sites, but the real meat is in the SEC filings and the backlog figures. If you're managing an individual brokerage account or looking for investment help through a robo-advisor like the SoFi Invest platform, it's important to remember that small-cap AI stocks like this carry a beta of 3.44. That means for every 1% the S&P 500 moves, Big Bear could move 3.4%. That kind of volatility can be a tool if you know how to use it, or a disaster if you don't. Looking ahead, the outlook for 2026 is centered on one thing: execution. The company is projecting revenue between $160 and $180 million for the full year 2025. We will see if they hit those numbers when they report in March. The catalysts for the next few months will be additional contract wins in the Middle East, specifically following the opening of their UAE office, and any updates on the integration of Ask Sage. The risk, of course, is that the government contracting cycle can be slow and unpredictable. If those backlog numbers don't start converting into recognized revenue faster, the market's patience might wear thin. There is also the macro element. As interest rates begin to stabilize, the environment for small-cap growth stocks is becoming more favorable. This is why we are seeing increased activity across platforms like Robinhood and SoFi. People are looking for where the next big move is going to come from, and they're tired of the same 5 mega-cap stocks. BigBear.ai fits the profile of a catch-up play. It's a company that has the technology and the customers, but hasn't yet seen its stock price reflect its full potential. Contrast this with the common investor expectation that AI is a bubble. While some parts of the market certainly look stretched, the defense AI sector is a different animal. This is a must-have for national security, not a nice-to-have for a consumer app. That is the fundamental reality that sets Big Bear apart from the dozen or so other AI penny stocks you might see on various trading platforms. They are doing the hard work in the trenches, literally. In summary, the expectation was that BigBear.ai would fade away like so many other SPACs. The reality is, it's emerging as a legitimate player in the defense tech space. Friday's 11% jump to $6.26 was a loud statement that the market is finally paying attention to the substance over the noise. We saw record-breaking volume, a breakthrough of key technical resistance, and a strategic partnership that actually puts their technology into the field. While the potential for dilution remains a cloud over the stock, the underlying business metrics and the shift towards profitability suggest a company that is maturing. If you were looking